welcome everyone back to DeFi Raiders. Today we get the chance to hear from Darius, the co-founder and CEO of Vertex, and all-in-one DEX that's launching on Arbitrum. So I really appreciate you joining us today, Darius. Really looking forward to talking about your project. You want to go ahead and introduce yourself, give your background both in DeFi or prior to DeFi, and then how you ended up founding Vertex?
Yeah, sure. So I'm Darius. I'm co-founder at Unlimited Technologies, which is a company that's building the software for Vertex protocol. My background's in trading, so most recently in crypto. I ran a couple of small proprietary trading desks. And then prior to that, I helped establish a hedge fund that was trading in commodities markets. And before that, I ran metals trading and FX businesses in large investment banks. So come from a very much a trading focus and have included like a number of people in our team that are also from a similar background. So really focused on kind of retail users, but also our institutional partners as well.
Very cool. So yeah, so you have quite the wealth of trading experience, which is cool. How'd you end up in DeFi?
Yeah, it's a funny story. So when I was working at the fund, well, I had a friend try and convince me to buy Bitcoin in like 2013 or so, and I ignored him. And it's cost me a significant amount of money at the interim.
Hey, I did the same, bro. We've all been there.
And then when it got to like 2016, 17, BitMEX launched, and I was still interested and started doing a bunch of like cash and carry trading. And quickly was doing a few different little arbitrage trades, all on my own account. I did that for about a year or so, whilst I was still trading at the fund, and I wanted to start doing crypto there, but couldn't get it over the line. And then sort of drifted away from it a little bit. And then about 3 years ago, things started booting off again. DeFi summer, there was a whole bunch of stuff happening, and I just went really deep into the weeds and was fascinated by what was going on, and was in the position where I could kind of make the jump. So took a leap into running a trading desk, and just didn't look back from there then, and just really have always built businesses on the trading side, and just DeFi was like this opportunity to do something really interesting on the building side, and transition away slightly from trading day to day, and it just seemed fun, so I went for it.
Yeah, that's pretty awesome. I totally feel you on the Bitcoin thing. My boss actually in 2011, while I was overseas, was like, "Hey, you gotta buy this. This is gonna be huge." And I'm like, "Bro, I'm not buying like fake internet money. That's ridiculous." And little did I
Yeah.
know if I'd just taken the time to wire some $100 worth of money, I'd be retired right now. Not that, I mean, I'd be doing this probably, but I'd be I'd be sitting pretty. So
Yeah. Yeah, it's a common story, right?
it's kind of the story of my crypto career, which is why I don't do too terribly much investing, more learning, and just trying to understand everything. Is I've seen all these projects like early, and I'm like, oh, that looks good, and then I don't do it, and then it's like, oh, that was a 20x. Oh, well, oh well. So I just keep. Luckily, I'm not learning the hard lessons, where I lost money. So I'm just
Right, yeah, fair
I'd
enough.
rather miss and not lose than swing and miss. Um,
Yeah.
yeah, so cool. All right. Well, I mean, so yeah, thanks for the intro. Thanks for the background. And just so everyone's aware, they are a fully docs team, right? So not just, you don't just have to ask about the KYC and stuff like that. Darius's information, his name, his whole background is out there. You can dig into this team if you want to on your own time. I won't have them talk too much into that, but which is, obviously something that builds a lot of trust is when you're willing to put yourself out there, which you guys have. So I think that's really great. And then the reason I'm so excited to hear from you guys is because, with all the stuff with, you've been hearing in the DeFi for a while, kind of moving away from the central exchange experience. How do we get this in, on the decentralized market? How do we bring all those capabilities here, especially in the light of things like FTX and all those other collapses, right? And so we've seen that whole shift away, enabling users to be truly decentralized. But in order to do that, right, we needed the infrastructure to be built and proven. And when I started digging into Vertex, when I first found it, that's kind of what I'm seeing, right, which is super cool. And and you're doing it the right way from my view. You're not racing to be first, rather focusing on kind of trying to be the best and solve a bunch of problems, which is one of the reasons I was really kind of excited to talk to you and learn about everything that you guys are doing. So we'll kind of dive in a little bit here, and we'll start kind of with the problems, right, that you guys were addressing and noticed. So first, would you like to talk a little bit about the problems with the central exchange experience, and then the problems with the decentralized exchange experience, and then we'll kind of get into the details of how you guys are fixing all those?
Yeah. So I think if we zoom out a little bit, I think one of the things that's interesting to think about is like who is involved in crypto right now, and it's really like two major groups. So you've got your retail users, and they come in and people want to degen into whatever random shitcoin is the flavor of the month. Maybe they're buying some Bitcoin, maybe they're buying some ETH, maybe they're doing some other bits and pieces. Fine. And then on the other side, you've got more institutional players, typically market makers, who are helping provide liquidity, move tokens around, help provide the opportunity for these users to come in and buy and sell the tokens of their choice. And initially, the whole market is really set up on the centralized exchange trading experience. So I mentioned BitMEX. They were one of the innovators in the futures space. But there's a whole bunch of centralized exchanges we're all familiar with, and they operate on a pretty conventional model where it's order book based. You put a bid offer up, and then people buy that and they pay a fee. Fine. And then as time went by, I think users became aware that like the centralized exchanges, this whole thing of like not your keys, not your coin. So custody was an issue because these centralized exchanges hold your assets. They also give preferential treatment to certain users. They have different fee structures, different access structures. So certain market makers have access to fast APIs, other people don't. It's very hard for users to get any kind of ownership over one of those structures. It's very hard for projects to get listed on some of the exchanges. And then DeFi just sort of exploded about 3-4 years ago. I think the innovation of the AMM, particularly with Uniswap, really set the tone there, where they looked at it and they said, okay, well, we feel like the issue is the fact that you need market makers to provide liquidity. So what can we do? You can put assets on chain. Gas is too expensive on Ethereum to use an order book. So we're going to put these AMMs up, and retail users can really easily become the market maker. And we just disintermediate all the institutional shit, right? And that worked incredibly well for long tail assets. All these like tiny shit coins, and you see like even now, if you want to go and get certain tokens, you really got to go to Uniswap or one of its equivalent competitors. I think the problem is with that is incredibly capital inefficient. It's very expensive in terms of the number of dollars you need to hold on chain doing nothing to provide liquidity for some of these things. And the way that DEX is bridge that gap was by putting unsustainable liquidity incentives for their project. And you saw this growth of like what's being termed mercenary capital now, right? Where people drift from exchange to exchange, they extract all the token mining, they dump the tokens, and then they go to the next project. But really, the problem is with it's very, very expensive to have a market that is tradable on an AMM-based exchange like that. And so when we were working on Vertex, the conclusions we came to was we needed to be capital efficient and fast, the same way that a centralized exchange would be. But we also needed to be open architecture and structured with a token that would allow people to use the exchange freely, take a part of the ownership of the community, and most importantly, be self-custodied. So their assets were never in danger. And so a lot of the design choices we've made have been confronting those problems. I'll pause there because it was just a lot of talking from me. I'll give you a chance to ask me a question. But that, I think, is the problem and the solution we're going towards.
Yeah, no, great breakdown. I really appreciate that. I think a big thing that you really touched on there was the capital inefficiency with using the market makers, moving the money around and all that different stuff, and the fragmented liquidity that creates. So you guys are really thinking about kind of all these things all at once. So yeah, so let's kind of get into kind of all the features that you guys are implementing to solve those problems, right? So just from basic, one thing that you're doing that I think is cool, and I've seen a couple of things kind of lean into is the fiat on off ramp, right? Which is, we talk about how do we get new users on here, right? Okay, well, we got to simplify their ability to get into DeFi, right? And now you're kind of rolling everything into one. You're giving an opportunity to put their money onto chain, right? And then you've got the AMM or the market makers involved, and then the ability to trade and all these different things. So let's kind of dive into some of those. I mean, you tell me where you want to start, because you guys have done a whole lot of things here, and I would want to hear kind of what you guys are most excited about.
Yeah, so I think one of the things we've really set upon is making everything as easy as possible. One of the things with crypto, particularly with being on chain, is I think we've all been there. Like everyone that would be on this call or listening to this is probably pretty advanced user. The first time you go on chain, someone says to use a non-custodial wallet, that you try to on-ramp cash. It doesn't feel good, right? There's a lot of friction and it feels difficult. And so, you mentioned the fiat on-ramp, off-ramps, the bridging, all of that. Initially, we'll do a lot of that with third-party providers. So we're going to provide a whole bunch of facilities on our dApp that allow users to just deal with that in a very easy way. Now, any project can do that, but, we're making sure that we do the work and we have those there. I think the thing, personally, I'm really excited about is we've made it extremely capital efficient. So we'll have spot, perps, money market all in one place. Now, why should you care? Basically, the user experience we're aiming for is you deposit your tokens, and that can be, wrap BTC, ETH, and the number of tokens will expand as time goes by. But eventually what we'll get to is a number of those tokens you can use as collateral, and you can trade perps on top. And so in the long term, what we'll aim for would be multi-chain. You can deposit tokens from any chain, put them in, a number of them will be used as collateral, and then you can trade perp markets on top. And the machine should just magically kind of figure out the right thing for you, and you just then manage it on top. So We do that, and then we match that up with a sequencer structure. So we have a architecture we've built, which is a Rust-based version of EVM, whereby we can essentially just make all the actions on chain really, really fast. For a standard user, okay, well, what does that mean? It basically just means that when you click a button, this thing should act as fast and as slickly as any centralized exchange. And so what we get to is, instead of compromising that you're using DeFi because you're not comfortable with centralized exchanges, but you can't find another solution, so you compromise, it should be you come to us and it's zero compromise. Everything you want to do right there.
Yeah, very cool. So for example, right, so say you offer, Phantom on there and people want to trade Phantom, but, then they want to, kind of switch over to BNB, they'll be able to, just like a centralized exchange, just swap it one click, it'll bridge for you and do all that all in one.
Ultimately, that's the plan, yeah. So obviously version 1's not going to be that, but that's the kind of roadmap we're aiming for.
Yeah, which is very cool. I think, it really is, looking forward to that centralized exchange experience that everybody wants. And that's all the little things that kind of go into it that nobody has really truly solved yet, which I think is awesome. That you guys are working on that. And then kind of, some of the things that you talked about there, right? So you talked about the spot and perps. And it's also mentioned that you guys are going to be offering leverage on both, right?
That's correct, yeah. So I think in truth, initially, most of the activity is probably going to be going through the perps, but we'll increase the activity on the spot side as we expand our asset base. So it should be quite fun. I'm kind of looking forward to seeing people come in and see how they use it, and we'll push it around as people come in. But yes, we'll have leverage on both.
Very cool. I think that'll, entice a lot of people who are interested. I think that'll entice a lot of people to come and check it out. So especially some of the more advanced traders who are looking for that experience. And then with what you talked about, the different assets that you're looking to bring on, I was reading through your documents, right? And so you guys are also going to be providing support for illiquid assets, right? To help, draw TVL. What's kind of your approach for that? As in, are you going to host those as potential LP illiquid assets, or are people gonna be able to use those as collateral kind of things? What are you guys looking at there?
Yes, it's a great question. So I don't think we'll likely be using illiquid assets as collateral. I think when you look across the market, there's just plenty of evidence for why that's a bad idea. But the chat around illiquid assets really points to another part of our technology, right? So we've built this thing where you can LP into our order book. So you can do an XYK pool, and that liquidity will show up on a central limit order book type structure. Now, why is that important? For plenty of projects, when they're looking to transition away from being solely a kind of long tail asset only on chain, maybe they only have their token listed on Uniswap or whatever, it's very hard to go away from that to then going and listing on a centralized exchange. And what that means is lots of these projects pay very high fees to market makers and exchanges to get listed. And really, they haven't had any alternative. There's just been no way of getting their product out there and getting stuff listed. The beauty with us is we offer an option which will help protocols transition from being solely on chain in terms of their token offering to going to centralized exchanges as well. And so we're kind of providing a halfway house where if you're a protocol and you want to get some stuff going with market makers, you can put stuff in an LP, put it on Vertex, And then you can go and talk to market makers and say, hey, look, here's an order book, here's some liquidity. I'll incentivize you to trade this a bit, get liquidity going, and then it's an easier sell to get it into exchanges, and you can kind of grow organically. Where at the moment it's such a leap that projects really struggle to make the jump sometimes. So we think we can provide a service that is lacking currently.
Yeah, very cool. And then you also, right, obviously that eliminates some of the costs, right? You see projects that, everybody asks when a new token launches, oh, when are you going to be listed on this? When are you going to be listed on that? I think there's a misunderstanding about how much that costs to get listed
Yeah,
on some of those things. And so,
yeah,
yeah, so
yeah. It's a
having that liquidity, and that backing, right, that obviously makes it more attractive for a central exchange to want to list you and makes it easier. Yeah.
Yeah, I think it's a big open secret, right? No one really talks about it, but it's a lot of money. And so creating a little bit more of an open market for it should help bring prices down.
Yeah, absolutely. Very cool. Um, Yeah, very cool. I like that. I like that approach. It really shows that you're not just working for yourselves. You're trying to help everybody work for the greater benefit of other projects who need to gain that traction. So
Yeah,
very
look, I
cool.
mean, I think I think one of the problems we've identified with crypto generally is it's it's been a little bit of a cartel market. It hasn't always been that people have operated in an open and fair way, but the fact is there's an opportunity to grab market share by giving people a fair deal. So we really care about having, market leading fees, having open access, having fast, easy project to deal with. We want to make it so friction is as low as possible and people come and use our project.
Yeah, I think that's the appeal that most people are looking for. Ease of use, frictionless, and what helps the most. So very cool. All right, cool. So let's a couple other things that I think are really cool what you guys are doing. And one thing I kind of wanted to get like a little bit of a more of a explanation and maybe like a layman's term explanation for users who are going to hear this and don't necessarily understanding. You're cross margining to avoid liquidation, right? Pretty unique. I read your example through it, like kind of makes sense to me, but would you mind kind of breaking that down in simplified terms and how that a user can understand that, hey, I put up this much capital for a leveraged trade, but only this much is actually a risk because it's split across these different pools.
Yeah. So I think lots of users think that when they use isolated margin that their trades are safer. And the truth is each individual trade is far riskier in an isolated margin scenario than it is in cross margin. And the reason is if you look at an isolated trade, let's say you come in and you do some people are doing 50x trades, 100x trades on isolated leverage. The problem is that in crypto, you put this on, say 100x, and the maintenance margin you have to have for it is 0.5%. You've put 1% up, and you need to have 0.5% to maintain that trade. That means if the market moves 0.5% against you, you'll get liquidated. Now, given the volatility of crypto, that is more likely to happen than not. And frankly, that is where lots of money is made by exchanges by seeing these guys get wiped out. Right? The difference with the cross margin account is you say, okay, we're going to take a look at all your assets and all your liabilities. So you put some spot tokens in, you put dollars in, and now you're trading leverage on top. If one individual trade goes against you, you're less likely to be wiped out because the profit and the assets you're holding as a portfolio are less likely to have all dumped in sync by 10% on a flash crash or whatever it is. So it just makes it more robust for users, and by allowing you to borrow, trade against your Bitcoin or ETH with perps, we're just making every part of your portfolio sweat. And so you kind of, everything's working for you. And you still got to manage your risk. And, if you get over leveraged, you can still lose money. But we're trying to give users the best shot possible to keep hold of their assets and make money when they're trading.
Yeah, very nice. Yeah. And I think, messing around with leverage is, a dangerous game anyways, that a lot of very inexperienced traders, for example, I won't touch anything really over 20x leverage. I'm not really comfortable over that with my level of trading, but there's like you said, there's the thought that isolated leverage, is safer, but right, you do have the volatility of one asset, and 100x leverage is just crazy to me, right? A fraction of a percent of a movement, you lose tens of thousands of dollars because you went to pour a cup of coffee. It's crazy to me. But yeah,
it is crazy. Yeah.
Yeah, it's almost like it sounds to me like it's the cross margin is almost just taking into account the volatility and the liquidity of your other positions to help prevent those liquidations. Is that like kind of a simple breakdown?
Yeah, it's just giving, yeah, exactly. It's just giving you the best shot possible,
Yeah.
Rather than like setting people up for failure. We're trying to set people up to succeed.
Yeah, very cool. And then, okay, cool. So I appreciate that. I appreciate you breaking that down. And then a couple other things kind of want to talk about here. Just so you're doing the multiple interfaces, right? You've got stuff for expert and beginner traders. As advertised, the beginner mode is to help users become more familiar with trading and stuff like that. On top of those interfaces, are you guys looking to promote any type of educational content for the new traders to help them use that, or do you have that already for your project so they can go in and, here's the basics for, the basic level, beginner level, here's how I can utilize this properly, and then that advances further?
Yeah, so I think we'll launch with our kind of expert mode, if you like. And then the idea is we kind of transition to a more simple interface for people, um, probably in the next 3 to 6 months after we launch. My front end guys already kind of got tons of ideas and working on it. So we're kind of excited to share that as it grows. I think on the education front, it's a really interesting question. We definitely will do a bunch of that, and you see the content we have on our Twitter feed. If you go to our blog, you can see that our comms team makes a great effort in producing as much content as possible. But I think ultimately, like, the best way of getting educational content out there is probably just using community, and it's talking to people like yourself, doing Twitter spaces. It's, we have an ambassador program where we have a bunch of sort of power users who come in and write threads and talk about the project and explain different aspects. We'll be looking for just more and more of that type of stuff, because the power of many sort of beats the kind of power of us just trying to do it in a centralized fashion. We'd much rather just put it out to everyone in the community and use the weight of all those brains to build that stuff out.
Yeah, very cool. And there's also already, some really high caliber education platforms out there that teach trading and teach all this stuff that can be leveraged too, without taking away your ability to focus on the product you're really trying to build.
Yeah, I think that's right. And like, trading's really a journey. Most people will learn as they go, learn by doing, have different things they want to learn. I think we just want to create the best interface for executing possible, and we'll leave the education mostly to others.
Yeah, it's a good approach. You don't want to stretch yourself too thin, and not be able to really focus. So, all right, cool. And then where was that next question? All right, so what I kind of want to talk about next really is kind of your fee structure, right? I know that you guys are on Arbitrum, right? That's like a number one kind of reason for moving to Arbitrum is, you get the all the perks of ETH minus the, ridiculous fees. For example, finally closed out my Aave position that I had on ETH mainnet. And that was like quite the haircut, right? But being able to move over to, yeah, not thrilled about doing that. But I did it during the pump, right? I did it during the Bitcoin, or did it during this pump, so I was able to kind of still make like a little bit of profit, which was nice. But definitely took that haircut. But what fees are associated with using your project, right? So for example, they on ramp money, are there swap fees, or there trade fees? Like, what are all the different fees that you guys are going to be taking to support your protocol?
Yeah, so in terms of the fees that accrue to the protocol, it's really two main kinds of fees. One is taker fees, and the other one will be settlement fees. So every time you put like a trade on our order book, basically you only pay gas when the trade matches. So if the trade, if your bid connects with someone else's offer, so you buy from someone, you'll pay a tiny bit of gas, and we will basically take that out of your account. And then the other part of it is just the execution fee. So on most exchanges, depending on where you're trading, you might, as a retail user, pay anywhere from 10 to 25 basis points to trade. So with us, we haven't exactly set the fees yet, but the way it looks currently is it'll be anywhere from like 1 to 3 basis points for the majority of trades that go through. And that's for taking. Maker trades will have zero fees attached to them. It's a very, very competitive price point.
Yeah, extremely competitive. And then, which is cool. Nobody wants to pay an asinine amount of fees to make a trade, just to even say you're in a losing position and you want to exit that, right? Nobody wants to take another 1% fee just to get out of something they've already lost a bunch of money on. So
yeah, and fees are kind of the silent killer, right, for most traders.
Mm-hmm.
Like when I was trading in TradFi, you go and do statistical analysis, and it was like the number one thing that killed most trading strategies was slippage and fees. And so the more competitive we can make those, on average, the more traders will make when they trade on Vertex. So that's kind of the thinking.
Yeah, slippage. Yeah, what a nightmare sometimes. I had some of the early degen plays I made, I'm like, oh man, I'm up like 40%. I'm going to try to take some profit here, not realizing that, it's a new token launch, not understanding it. Immediately have to set my slippage to 30% just to exit. And I'm like, okay, I only made 5%, which,
Yeah, makes sense. I mean, that's another factor. It's hard sometimes to explain because we put so many features in, but that's a great example of why our hybrid AMM order book approach works so well. So instead of just having to like execute at 30% slippage, you'd still probably, with such an illiquid coin, have to put some slip on it, but you could put a bid in the order book and just have that be working for you at like a 5% slippage or something, right?
yeah.
And you could just set your bid and forget. And that way, we're just putting all these tiny things, just put more control in users' hands and save them money.
Yeah, a lot of safeguards. Yeah, I like that. Very cool. All right, so let's see. Oh, and then one other fee I kind of wanted to talk about. I know that you had mentioned using third-party apps, right, for on-ramp and off-ramp. Are you guys?
Yep.
What kind of due diligence are you doing that, right? For example, like KuCoin, right? If I want to on-ramp money through KuCoin to get it over, it's like a huge. I think it's like 5%. So what kind of like third-party apps are you looking at to help, and what kind of like fee kind of margin are you looking for there with who you work with?
Yeah, so we've been talking to all the usual players. And so I think it depends on size, whether you KYC with them or not. Obviously, we don't do KYC, but they might do KYC. The fees can end up in the region of anywhere from 0.5% to 2.5%, depending on size and provider and whether you use a credit card or, there's lots of different things that come in. I have to say, I'm not delighted always with the fee levels, but just to make this quite clear, those are on-ramp provider fees. They're not Vertex fees, so it doesn't go in our pocket. It would go to the third-party provider. All we're doing is adding that onto our interface, making it super easy for you. You can just get stuff into your wallet, and then you're ready to trade, good to go ASAP. So it's a convenience rather than a revenue generator for us.
Mm-hmm. Yeah, I think it's cool for people to hear that, hey, this project is, they're using a third party app, but they're trying to work with the cheapest third parties at the same time. The cheapest, but cheap but good projects.
Yeah. It's something we're cognizant of. I think one of the things people don't always think about in crypto is kind of risk. So sometimes you end up choosing something slightly more expensive because maybe it's lower risk than something else.
Mm-hmm. Which is also crazy to me, because the first thing you should think about when you talk about crypto is risk, as we've seen over the course of the last year, especially.
Yeah, I think that's right. I think people are getting smarter, though, right?
Yeah.
The community generally and people in crypto generally seem a bit less pure degen than they were 12 or 18 months ago.
Yeah, I mean, it was different, right? And I got in towards kind of the tail end of DeFi summer when things were still kind of pumping, and then obviously they started to die off, but you really didn't have to worry as much about risk. Like, say, take a tomb fork, for example, right? There was a new tomb fork that was, 3 to 5 of them launching a day, it seemed, right? So it's like, oh, okay, well, I got rugged on this one, but I just 10x'd on this one. And so risk tolerance was a whole lot higher. Knowing you could make 10 times your money that you lost in the same day, which is just obviously not the case anymore. So I think, risk being at the forefront of people's minds and risk mitigation leads to, smarter use of your money and understanding risk. So when projects are talking about that and keeping that at the forefront, that really shows that you guys are really thinking about, all the little things that your users need to be thinking about as well.
Yeah, I hope so.
Yeah. Yeah.
I mean, a year ago. Go on. Sorry.
As I said, there's only so much you can do. So, to make a user pay attention to that. So.
Yeah, look, and I think a year ago, if we'd have said an exchange that kind of competes with centralized exchanges, but all on chain, I don't know that it would have been as exciting to people as it is now. The response we're getting from people is great, but I think it's because we've seen all the problems with FTX, Celsius, etc. Right?
Mm-hmm.
A year ago, people were, I think, a little bit complacent.
Yeah, I would agree. I would agree, especially with the 6 months before that year, so it kind of puts you in a weird mindset, right, where you were used to one thing working another way, and then you kind of didn't pay attention to all these risk factors, and then everything's kind of cascaded rapidly. And I think now that you've seen, just the overall TVL of crypto and DeFi especially just decrease, and how many people just lost tons and tons of money, and made people more risk averse. I think overall, that's why so many people want to talk about security, right? Which is good. And there's a saying to do your due diligence and stuff like that, but that only goes so far when people don't understand the diligence they need to do necessarily. So. But yeah, kind of with that, if we, I would like to talk a little bit about kind of your team's approach to security. Outside of, I know you guys are, getting audits and all that kind of stuff. But then you're using third-party apps, right? So, what is your approach to the security with the user's information as far as the third-party apps that you are using, right? For like the single sign-on, et cetera. I know there's, what are you looking for in those protocols that you're working with to handle those things?
Yeah. I mean, for the most part, we're just looking for like high standards of encryption, security, etc. We talk to the teams. We'll ask how they store data, what data do they store, how do they use it, are they using kind of market standards, best practice. One of the good things with some of these things that bridge Web 2 to Web 3 is some of the Web 2 problems are better solved than the Web 3 ones. So it's kind of easier to do the diligence on those. I think the difficult thing with Web 3, as we're all aware, like smart contracting can be difficult to sometimes see the vulnerabilities in. So like, funnily enough, a lot of where I have more concerns is around, my co-founder and I spend a lot of time kind of wargaming things on the smart contract side and the security side and saying, how will our models react in the event that someone tries to squeeze an asset, or that we see a fast-moving product, or we have poor liquidity? What will happen with liquidations? What will happen? We spend a lot of time on that stuff. It's not that we don't care about the third-party stuff. We do, and we do diligence on that. But it tends to be that the complicated bit that will be more tasty is in the Web 2 space, and those Web 2 ends of things tend to be better solved for than maybe some of the more complicated Web 3 things, which more falls onto us, which is kind of the way I like it, right? The bits that like we view as like having significant risk, we're the ones taking the approach on it, doing the security, dealing with the auditors, all of that. And so, we have confidence that the partners we're going to use are secure and safe and doing the right thing, basically.
Yeah, very cool. And great to hear, right? Because everyone here has seen, the projects that have used, third parties, right? And then something goes wrong with the third party and they're like, oh, well, hey, we just hired them. That's not our problem, right? And that just kind of goes to show you kind of the quality of the team when it all starts to unfold is, yeah, you hired someone, but you didn't actually look into whether this was like a good person to hire. You probably just hired the cheapest person, and then you don't want to shoulder the blame, right? So,
I think it goes back to your question about fees for things like on-ramping. It would be easy to just go and say, okay, well, what's the cheapest on-ramp out there? Let's find it. And in truth, it probably would be it's not even with a lot of these things that anyone's dishonest. It's just they're new and they're figuring it out, and therefore mistakes happen. So we're always looking for like reliable partners. And it's something we think about.
Yeah, very cool, and very reassuring. So, and that's
good.
Safety is something that I think is really, really important, as safe as you can be, right? This is crypto, and this is DeFi especially. There's always risk involved with any kind of, even in TradFi, with any kind of investing or any kind of things to do with money, and there's always risk involved. So it's nice to hear that there's like such a large scale approach to trying to do every single thing the right way.
100%.
Yeah, cool. So, all right. So I think we got a good kind of overview of everything that you're doing within the project. I've got a couple of things I want to talk about. One, what are you guys learning from the test net as you're seeing? What kind of issues have you found? What kind of upgrades have you guys kind of seen, or are you getting a lot of confidence from the test net? How are things going over there?
Yeah, it's a great question. I'm just trying to like order my thoughts to give the most pertinent feedback. I think the feedback has been in like two real formats, broadly speaking. One has been to do with our like back end. So naturally, when you build things, bugs crop up, stuff happens, and we've seen that. And actually, that bit is almost the easiest bit to solve because it's sort of a math equation, right? Like maybe the answer isn't quite right as it is, and you just go back and you fix it, and then it works, and stuff happens. So that's great, and that's been super useful. And at the same time, we've been dealing with an auditor, so it's allowed us to just iterate really quickly and improve the product and make it more secure and stuff. That's been great. I think the bit that's been really interesting for me and more unexpected has been around interacting with users and their feedback around what they want on the front end. And I think users can be extremely educated and tell you exactly, what they want and blah blah blah. But sometimes, users just tell you, no, I want it to do this and it doesn't do this, and fix it, dude. And both points of view are valid, right? And it's been great for us to get our head straight around, okay, well, here's what we've got to do to make this better. And I've really enjoyed that feedback from the users has really helped us transition the product. And hopefully anyone that's been looking at our testnet front end will see the progress we've made by doing that. And the guy that does our design work for front end is a beast. He just works constantly. He loves it, right? So I have the luxury position of seeing him process that feedback, spin designs up, and we spend ages debating, what number should go where and how it works and blah, blah, blah. But I think that investment in time and effort is showing returns. It's going to show more returns. I see the advanced design we haven't implemented yet, but I know that I feel confident users are going to be really excited about using our front end and interacting with the platform because we just made it really nice. It looks nice. It works. It's going to do the right thing for users. So, I think that's been the biggest part for me. But obviously, there's a huge value in the back end stuff as well.
Yeah, absolutely. Yeah, and I think you guys, I actually have enjoyed the testnet so far, just messing around a little bit on it. So I think that you guys are doing some pretty cool things here. And definitely, I've seen some upgrades as it's gone to, kind of from the beginning. So yeah, definitely taking your user base feedback and figuring out how to apply all the different things as efficiently as possible. And so, yeah, and for those of you in the audience, if you haven't used their testnet, hop on their Twitter. It's one of the first links. It's pinned. It's super smooth so far. I've had a good experience. So it really shows the quality of the work that you guys are doing, and that your lead dev must be really tired for the amount of work that he's doing.
Yeah, he's a busy boy.
Not that devs are known to get sleep very often. So not if you want to be successful. Very cool. So yeah, so excited for you guys on that front. Excited for what you're doing there. And then I kind of just I got a couple more questions, and then if we have any time with you, we'll see if anyone in the audience has anything. But kind of your roadmap, just to cover a little bit here. What I think is cool is that you guys are teamed up with Perpy, right, to bring copy trading, which there could be another project that's done this, but obviously there's so many things to follow on so many different chains, it's impossible to understand it all or to be tracking it all. But you guys are bringing copy trading on top of everything, which I think is super cool. As kind of, maybe want to talk a little bit about what you guys are doing there with Perpy, and then any other things in the roadmap you want to highlight.
Sure. We're really excited about the partnership with Perpy. I think could add a lot of value for both parties. I think for us, the great thing about being on chain relative to being, if you look at centralized exchanges, they have bots and they have copy trading and they have all these different things integrated in one platform, which they control, right?
Mm-hmm.
I think for us, in terms of our ecosystem, we're really excited about having people just come and build on Vertex. They can capture value. Their community members can drive the use case. Because what that means is by being decentralized in that way, the project can just iterate really quickly, right? We can just become this kind of unstoppable collection of apps with Vertex at the core being the main trading engine and risk engine. And then if people come up with interesting things they want to build and build on top of us, then that's great. And we'll encourage that and we'll partner with people and we'll try and help them. But the idea is really to get other people to build on top of us. And then for our roadmap, to focus on our first thing is just get out, get on Arbitrum, and get to a point where you can trade 20 to 30 perp markets with a variety of different collaterals. We'll have some limited spot trading, but it's not going to be huge initially. Once that is completed, the idea is to expand and go multi-chain and bring on as many spot tokens as possible, such that within, plan would be 12 months from launch, you come to Vertex, you trade on Vertex, you never really need to go anywhere else. All your tokens, perp markets, borrow lending, everything you want to do is mostly just going to work out of the box on Vertex. You do it non-custodial. And if you want to do something else that's a little bit more sexy, we should have a third-party integration or partnership that will help you out with that. That's the endpoint. That's the target. You come to Vertex, you do all your shit there, and it's safe and it's cool.
Yeah, very cool. I mean, that's a great selling point. And that's kind of, that kind of answers my last question, which was, how do you compete with like GMX, right? With everything that GMX has done, I kind of like to say that GMX is like the tether of trading, right? Everybody's been saying USDT was going to collapse. People were flooding GMX like crazy, but they just keep building. And that was kind of, what is your selling point for, competition with GMX? And that, I mean, you kind of just answered that right there. So
yeah, like people ask us about GMX a lot. I think GMX is actually a great project, and the team that's built it have done a great job. It's just a totally different model,
Yeah.
The difference is with GLP, obviously, it allows you to spin up markets really quickly. They didn't have any problems with liquidity initially because the liquidity and the activity sort of scale side by side. But the problem they're facing now is it's very hard to grow GLP beyond what it already has in assets, and they've run into some scalability issues. And I know they're building out synthetics and they're trying to do a few other things, but broadly speaking, there's kind of a capital limit there. I think with us, the biggest challenge is making sure we have the initial liquidity on the markets, right? But as we grow and we get volume going, the scalability of our model scales with the volume we're doing. And we can bring other market makers in and we can scale that way. And so the capital efficiency, which I mentioned at the beginning, long term, we think that gives us an edge to build the sort of exchange we're building. And I think in the ecosystem, it's very complementary to what GMX has built. So, we have overlap, but I don't view them as competitors, more kind of an alternative. Does that make sense?
Yeah, 100%. Yeah. Yeah, totally agree. Especially on the scalability side, I agree with that. GMX has run into those issues, and then trying to move kind of towards synthetics, right? They're a little bit behind the ball on stuff like that. So, but yeah, I do agree that they're a good team, but I also do agree that you guys are totally different models. So the competition piece is a little bit different as far as that goes. Cool. Well, that was really that kind of wraps up my questions. If you have time to potentially take a couple of audience questions.
Oh yeah, of course.
All right. I see unmute here has requested, so let me bring you up here. Then you can ask your question, and then anybody else, if you have a question, Jedi Block, I'll get you up next. All right, unmute. You're good if you want to unmute and ask your question. If not, we'll get. Let's see.
Hey, Wizard, you're on mute. Do you see that?
Hi, can you hear me?
I can now, yeah. Hi, how are you?
I'm good. I have a question for you, please.
Sure.
All right. My question is what challenges are you trying to solve in the first quarter of your project?
Yeah, I think in the first quarter, the biggest challenge is just building awareness and getting people going. We've got the partners for making liquidity, we've got the product lined up, we've got a good plan for launch. The biggest thing now is just getting out there, preaching the good word, and getting people to use the thing. We're really excited to see how that goes.
All right, thank you.
Thanks.
Hey guys, good afternoon. Darius, DeFi Raider. Nice to chat. Nice to listen to the progress you guys have made, Darius. It's great to, we interviewed Darius a couple of months ago when the guys were starting out, and it's nice to hear the progress that you've made. So yeah, well done. It's always awesome to, support a project and write about a project, and then kind of get the we're almost at the end of the story, and it's nice to hear that you guys have made progress. My question, or not so much my question, but just in terms of the educational material, from our side, from Blockmates, we will have all of that material out there for people, just to inform them, how to. At the moment, if you want to know how to get onto the testnet, it's not that straightforward because obviously it's a testnet. We've got a breakdown that's coming out during the course of this week, so the guys can go and check it out, and it'll explain to you exactly how to get on, a step by step in terms of how to do that. Darius, in terms of my question, when are you guys anticipating realistically, in light of where you are at now with your testnet and obviously your audits and the rest of it, what are your timelines looking like at the moment?
Yeah, it's a great question. So the first stage for us is an API only launch. So the idea is the guys that will be doing market making and providing liquidity, and anyone who wants to trade on an automated basis will get a run at kind of testing the protocol with very small amounts of money. We are aiming to do that in about 4 weeks from now. So depending on how that goes, and things can always crop up, but at the moment we look sort of in line to be able to do that. If we can get that launched in about 4 weeks, the next stage would be mainnet launch on the front end, and the target for that is really end of March. So we've got kind of 4 weeks, do the API only launch, solve any arising issues from that, and then once we get over that hump, we're really looking at kind of that should take about 2 weeks, and then we're really looking at like a 4 week gap then from end of February into end of March. So timeline's evolving, so it's not something we've put out there, not because we're trying to do anything other than only give people hard deadlines when we're sure we're going to hit them. But I'm pretty confident we are going to hit those deadlines.
Cool. Well, best of luck with that. DeFi Raider, it was cool to sit in. I've never sat in on one of your AMAs before. It was really cool and great questions. And thanks, guys. Good luck, Darius. We got our eye on you, sir.
Appreciate it.
Yeah, kick ass.
Thanks,
dude.
Jedi.
Yeah, rocking, man. Cheers.
We're doing it. We're doing it.
Damn right you are. Good luck. Thanks.
Cheers.
Yeah.
Bye.
Yeah. Thanks for listening in. It means a lot. Cool to have you here. I've followed your stuff for a while, so pretty cool for me. All right. And then I think if you got time, Darius, we got one more question.
Yeah, of course.
From Fernando. Let me get you up here, Fernando, and let you ask yours. And
can you hear me?
Hey, Fernando.
Yeah.
Okay.
I can hear you now.
You know, I've been trying the test for a while and looks really great. Congratulations about that. But I want to ask, what do you think is the biggest roadblock you're going to face with so many projects launching because of these, you know, CFI problems and sex and everything to attract, you know, customers to your platform?
Yeah. Thank you for the question. It's a fair question. I think the biggest problem is just getting airtime, getting out there. I think one of the problems with crypto is people can get very focused on hype. And in reality, like, whilst we always want to capture the zeitgeist, you know, like, I'd be lying as a co-founder if I said, oh, okay, yeah, we don't care, we're just builders and fuck it, we'll win in the end. That would be a lie. But there is something in that mindset, right, of just putting your head down and building the best product possible. I think if you look at the people that have really succeeded in the space, why have they succeeded? It's because they've executed and provided a product people want to use. So, examples I personally look up to, and I try and like point out to our team, look at Uniswap, look at DYDX, look at GMX, right? These are all decentralized trading platforms where they built the thing and the thing got the hype. You know, GMX was quite a slow burn for a while. They just kept shipping, kept building, kept improving front end, and it made a big difference. And so, you know, we've made no secret of the fact that we're doing partnerships and, you know, we go and talk to people and, you know, I'm doing lots of this stuff and we're going to have a token and we'll do an airdrop of the token and people will get stuff. But ultimately, the best advert for our platform is just build a fucking good product. And that's what we're really focused on. So I'm not sure if that answered the question, but that's what we're doing. I see 100% flashing up. Cool. Any other questions?
No, looks like that's about it.
Perfect.
All right. Well, what I like to do is I like to let you kind of finish it off. I'll make a closing statement, but any last thoughts you have that you want to put out about Vertex and what you guys are doing?
Yeah, I think, you know, we covered a lot of ground. I really appreciate you having me, really appreciate the time. I'd encourage everyone to just come and look at the testnet, follow us on Twitter, follow us on Discord, and I think the main thing is, you know, look into it, get ready to trade on it because it's going to be fucking great. I'm really excited to get users on there. As soon as we launch a mainnet, it's going to be really exciting to see that thing pop off. You're going to be hearing a lot more about Vertex going forward.
Yeah, very cool. I'm super excited to see what you guys roll out once the testnet is over, and I'll definitely be involved. I like what you guys are building so far, and again, thank you so much for your time and for coming onto the show.